Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, December 21st, 2021. And our top story today, we're breaking down investor and financial professional focus on retirement income. Well, joining me now to discuss this and a lot more, Ann Aldrich is with Artemis Strategy Group and Tamiko Toland is with Canex. Ladies and Tamiko, thanks so much for joining us on the program this morning.
Thanks for having us.
Yeah, we're going to talk a really cool topic today. One that continues to get a lot of traction is retirement income. We're going to talk about a survey that you all did with the Alliance for Lifetime Income. But Tamiko, I want to start with you because I'm just going to give you this softball question. I think it's going to start things off really nicely. Is if I had $1 million saved in retirement, and fingers crossed that I do, I'm not yet there, what's the best way for me to begin thinking about retirement income based on your recent survey?
Sure. So, I think a lot of people feel like $1 million is a lot of dollars. And, a lot of traditional planning views have seen that as a suitable goal. But the reality is that if you're planning on generating reliable income off of that, $1 million, it can be a little bit tight. So even accounting for Social Security, it turns out that people actually, whether they're financial professionals or consumers, really recognize the value of annuities in creating a better outcome. So we're not saying that you shouldn't try to draw it down from your assets and, take a systematic withdrawal. But oftentimes that's really best as a supplement as opposed to being the core of the strategy. And you can see multiple different pieces of that fitting together.
Yeah, and let's come to you because you helped craft this survey, this question. How was the question posed?
It was interesting. So with this survey we conducted, it was an online survey with 500 financial professionals and 2,000 consumers. And in this case, we asked financial professionals, listen, assume that you have a client who's 65 years old, they have $1 million in investable assets, they don't have a pension. How would you craft their ultimate retirement portfolio? And what we found is on average, financial professionals would put about 53% into stocks, 20% into bonds, and 18% into annuities. So this is on average, but we found that really interesting. And then we also asked that same question among consumers, a little bit different, but still, even with consumers, we had about 13% going to annuities, which, as Tamiko was saying, it's interesting because I think people are beginning to see the protection that annuities provide, particularly in a retirement income portfolio.
I'm sorry, Ann, I didn't mean to cut you off. I was just going to follow up. I mean, this has been a resurgence. And we've talked with yourselves and other folks from the Alliance for Lifetime Income. It really seems like the annuity has gotten reinvigorated. Maybe it went out for a jog, worked out, gotten a lot stronger. Ann, any thoughts about why the resurgence?
I have some information from our survey. I'm sure Tamiko has some additional ideas. The notion, we asked financial professionals actually in the past 12 months, have you changed the way you are approaching portfolios for your clients? 7 out of 10 of the financial professionals said, yes, I've made a change. And among those who've made a change, we said, why? And they said, interest rates. I mean, we've just had to make a change because of the low interest rate environment. And among those who did make a change, 68% said that they were putting more into stocks. 48% said they were putting more into annuities. So I know, Tamiko, you probably have an idea about this as well.
Yeah, so
yeah, go ahead, Tamiko.
Oh, thanks.
Go ahead. I'm sorry.
So certainly, interest rates are playing a huge role in how people are viewing annuities. And I think that some of the conventional wisdom around interest rates that for example, like an income annuity, is not going to be as useful to clients when interest rates are lower. The reality is that other strategies that people might use are also affected by interest rates, but the benefit that an annuity can have when you're actually annuitizing it is that you're taking advantage of some of the actuarial principles behind it. Particularly mortality credits, which I like to talk about as survivor credits, because it's the people who really are able to take advantage of that. But the reality is we're just looking at one slice of the overall economic picture. And when folks are really looking to increase the yield that they're getting off of their assets, whether that's for the purpose of income or just for growth, they're going to have to assume more risk, yet assuming more risk is actually risky, right? And so I think that there is a real benefit to looking at these products that are, just tried and true, steady performers, as well as like the full range of annuity products that are out there today. The industry in the past decade has really innovated significantly. So you have so many different ways of addressing different consumer needs through what is still called an annuity, but actually is truly a Swiss Army knife and does a lot of different things.
Yeah, I feel like there has to be there's been a reimagining, as you're alluding to, and I think people kind of really have to be educated, whether you're a financial professional or a consumer, about what is out there and how things have advanced. But a question for you, Tamako, and I'll come to you first, is does the traditional 60-40 stock bond split, that's what, that balanced portfolio, does that hold up in today's volatile markets? I mean, we have seen up and down in the markets this year in 2021 and 2020. The question is, does the traditional, the tried and true still hold up, or is there a better way?
Well, I think that there are a lot of folks, very smart folks out there, that are reconsidering what really makes sense given current capital market assumptions. But the reality is it also means that the tool of the annuity is that much more useful. And we've actually done some work around replacing the fixed income component, regardless of what the actual allocation is, but replacing that with an annuity in retirement. And that does improve outcomes, as you would expect. It actually also can improve legacy, which is, again, there are a lot of things about annuities that I think are counterintuitive to how a lot of folks have seen them. But I do think that we're in a position where financial professionals really need to get up to speed on, what are the current economic conditions. You can't rely on some of the tried and true methods of the past with the same degree of confidence. Come back to it and see what's actually going to work, and particularly for clients where you really need to squeeze the juice out of the orange in order to feel good about giving them financial security in retirement.
Yeah, I like that analogy, Anne. I just want to close out the same and come to you. Mm-hmm. This reimagining of that 40, as Tamako was alluding to, it is here. It is prescient. It is current. Your thoughts on that?
Well, I guess from the research that we're seeing, we've always talked about stocks and bonds. I think it should be stocks, bonds, and annuities. I mean, truly what we see with the research is that consumers value protection hugely. Financial professionals know that, but there's still a little bit of a gap. They don't know how much consumers really value that, and they need to understand how important it is for them for financial security.
Yeah, really important. Ladies, I need to take a quick commercial break. I apologize, but on the back end, we're going to talk about the investor perspective, the financial professional perspective, and is more education needed? You're going to want to stay tuned right here on BRN AM.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you'll have the freedom to live the retirement you want. This is what an annuity can do. Find the right financial professional to show you how. Learn more at protectedincome.org.
Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're talking this morning to Tomoko Toland of Kennex and Ann Aldridge of Artemis Strategy Group. Ann, Tomoko, thanks so much for staying with us this morning.
Mm-hmm. Thanks.
Yeah, Tomoko, let's start with you, and let's talk about investor education. I think you kind of alluded to this, you and Ann both did. There's a lot more education needed for investors and financial professionals. Well, let's start with investors first. How much do they know, and do they need to know more about these new annuity products?
So Ann can talk about some of the results about what they do and don't know, but I just want to push back on the idea that people need to know everything about annuities and how they work from the get-go. I think it's important for investors to have a basic understanding of how annuities can help them. And if they're being presented with options for planning, then it's the job of the financial professional to really say, this is something that serves your plan in this way. It happens to be an annuity. It's not critical to get into some of the things that we love to talk about. When we talk about annuities, we start talking about Romans and what have you, and that's not very helpful for frankly anybody, not even the Romans. So I really like to contextualize this in terms of what is an annuity doing and how is it serving a plan in a given situation, not understanding all of them. I really don't want consumers to have to go through that exercise.
Yeah, and your thoughts on this, and you know, is there a bias, like a behavioral bias that we all have? We all like to stay in our little comfort space, whether it's changing our diet plans, working out, or our financial investments.
Yeah, there is. Well, as Tomoko was saying, consumers don't know a lot about annuities, and they admit it. They say, I don't know. And a lot of them who have annuities say they can't tell you what type of annuity that they do have. However, as Tomoko was saying, often when you purchase an annuity, it's with a financial professional. They are relying on their expertise, right? And so that becomes really important. But this idea of in behavioral finance, there's idea of familiarity bias, right? And we turn to, like you said, we turn to the things that we know. And so it's human nature. But we asked this question among consumers. We said, a new investment opportunity has developed in an industry that you know or have a lot of knowledge about. How would that influence your decisions to make investments? 8 out of 10 consumers said it would strongly influence me to make an investment decision. And again, that's human nature, right? We lean toward what we know. But what we need to do is, as you were saying earlier, Tamiko, just be aware. We need to be aware of the other alternatives that are available to us. And for me, as a consumer, I go to my financial professional and say, John, help me through this. And I think that's what's really important is to seek that professional advice.
Tamiko, in terms of the survey, and just anecdotally and data-wise, are financial professionals on board with knowing the annuity products that are out there and proposing them to clients? Have they jumped in on this very important topic?
So this is a real mixed bag. I mean, there's certainly financial professionals that are very comfortable with annuities and they understand them and they recommend them and use them in their practices. There's still a lot of folks who are not really using them. And one thing that we know actually from the previous survey is that when you look at the retirement income planning strategies that financial professionals use, they tend to sit in like one little bucket of how they do things. They don't necessarily offer different options. And so a lot of them use strategies that are really not very annuity centric. And obviously, I think that just thinking about it from the perspective of their clients, it seems like their clients are going to want more different approaches, right? And so I think that it's really a great time for financial professionals of all kinds to say, you know, how do today's annuities work and fit into a strategy? And, you know, how can I responsibly and really, I think, confidently implement them? And that is all about education. Getting familiar with the products, getting familiar with how they work in a plan, because that is ultimately the most important thing, is for their client to understand, like, as I said earlier, like, how does it serve them? How does it improve their outcomes? And how does it make them sleep better at night and fit their own personal preferences?
And it's not a one size fits all approach. I mean, if I'm 15 years away from retirement and someone else is 15 years away from retirement, we might have different needs. And so therefore, the financial professional is relied upon to really provide differing solutions depending on what our needs are. So it begs the question, should they be educated and how should they be educated?
You know, how they're educated, certainly really good financial professionals understand their clients' needs. And that's the most important thing, to sit and speak with them. But there's a lot of information out there that they can access. Research that's been done by the Alliance for Lifetime Income, for example. We did a really cool study a couple of years ago to really understand what motivates people when it comes to retirement income. And the main thing that motivates people is this notion of financial security. They really want to have financial security, but there's a lot underneath the idea of financial security. Financial security kind of starts with, you know, products and services that lead to feeling, having a good retirement lifestyle. But then once you have that sense, that base, how does that make you feel? Well, it's really interesting. It helps people feel safe and secure, but also we found that people are feeling optimistic about their opportunities once they have that base covered. They feel proud about what they've been able to accomplish, saving over all that time. And where does that lead? It leads to what we call this sense of a full life. And so it's not just about the money. Certainly the financial security and peace of mind is really there, but there are other things about this notion of full life. You're going to be able to enjoy yourself. You're going to be able to live in a way that you feel independent. So, like I said earlier, this notion of financial security is really important, but financial professionals need to understand where it fits into a consumer's life and how they can get there. So taking the broad perspective, and this idea of a full life is just really motivating to consumers.
It's motivating me. Tamiko, I want to kind of close things out with you. And Ann brought up the Alliance for Lifetime Income. People can go to protectedincome.org. There's checklists. There's ways that, when I say people, if you're an investor, if you are a financial professional, there are ways to educate yourself and checklists to make sure that you are aware and about the newest products available and how to position them to clients.
Yeah, so protectedincome.org is a fantastic resource. As you say, whether you're a consumer or you actually are a financial professional, there is a special area for financial professionals where you can go in and actually you can customize materials that are approved and so forth. It's a great resource, and I do really encourage everybody out there to learn what is useful to you. And for obviously, if you're working with clients, figure out how do these things actually help your clients, and talk about it from that perspective, not from a product perspective.
Yeah, and let me ask you that both. I'll start with you, Tomiko. I don't need to be at retirement. I don't need to be 65 and to learn about these products. I'm going to turn 50 next year. I could be 50. I could be 45 to make sure that I know what's available. My financial advisor knows what's available.
Absolutely. And sorry.
Go ahead. Go ahead. Finish your thought. My bad.
Absolutely. One of the things that we talk about in the industry is sequence of returns risk, right? And that's also branded as like this zone around which there's risk at the point when you retire, but it starts before then. So starting that planning process, whether it actually involves purchasing an annuity in anticipation of that and as part of the protection strategy, or expecting to buy one later. I mean, there are different ways of approaching, and I'm not trying to be didactic about it, but I think that there's really, a great opportunity to glide into that point of retirement so that you're really creating much better security for the entirety of retirement.
Yeah, and Anna, just want to come to you to kind of close things out. I mean, I love that word gliding because it's true. You don't have to wait till age 65 or age 70 to think about or learn about the products. You can start today, educate yourself a little along the way. And I think that probably helps with some of those behavioral biases you were discussing earlier.
I think it does. And truly, as we've moved into the defined contributions, society. I mean, it's just part of what we are now. We used to have benefits that were available to us that we didn't really have to think about, but now we do. And I have young daughters who, as soon as they first started working, I said, you go get that 401k and you figure out what that's all about. And I think slowly over time, you don't have to learn it all at once, but slowly over time, you really have to pay attention. And again, using a good financial professional helps too, because we can't know it all, right? But as long as we seek the right financial advice, that helps along the way.
Yep, we certainly can't know it all, but I think you can chip away with gaining information over time. Tomiko, and it's great to see you. Great to talk retirement income. Lots of interesting trends. We look forward to having you back on the program again very soon.
Thank you so much.
Thank you.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in lifestyle, wellness, finance, and tech, a lot more, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or see our latest content? Check out our streaming partners, Roku, Amazon, and over 100 more. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.